Hello traders, Gary Wagner here, approximately 10:20 in Honolulu, 4:20 in New York. It is Thursday, 15th day of October, 2015, and this is the Daily Report for Gold and Silver. Precious metals quiet on the Western Front today, trading in essence unchanged to up a little bit. We're looking at COMEX gold, 1182.80, puts it up $3 on the day, low 73.90. High 91.70. We're trading really around the mid-range. When we look at spot gold currently trading in essence unchanged, down about $1 on the day. In terms of highs and lows, they're going to be roughly in the same place. Low 74.55, high 91.57. We've got really what I consider to be a good news, bad news scenario in terms of how we are looking at this market and what we're witnessing. Of course, first, to the good news. When we look at, first of all, a weekly chart in gold, absolutely breakout week in which we've seen this market effectively trade above the former resistance, really at around 1070, but you've got these series of, on a weekly chart, these series of tops, and the tops that I'm referring to really are the real bodies and not the genuine highs of the week, but the real bodies. In other words, either where it opened or where it closed during the week. And so you're sitting at around 1060. In that way, there's absolutely no doubt we can see that we've had some real genuine movement to the upside and that gold is really taking off. The other thing that we can look at in terms of a good news scenario, and I think this is really exciting, the question is whether or not it will hold this area and how long it will. And that is when we pull up our daily chart. Now, on this daily chart, I have one moving average. It is a 200-day moving average. That's extremely long term, obviously. And you can see that yesterday's action actually moved us above the 200-day moving average. That is quite exciting. And in terms of any kind of a technical study, traders really look at the 50-day and the 200-day moving average with some very, very large momentum, meaning that it really gives us some really strong indication of the overall move in the market. So you can see, as I just have shown you, this moving average, which is our 200-day, it's a simple 200-day moving average. We've definitely crossed and traded above it. That 200-day moving average currently sitting roughly at 1176. That's the good news. Bad news is, and I don't really consider it so much bad news, but when we look at the most recent activity, today's activity, we absolutely are getting this consolidating candle when you have a market in essence unchanged. Now, it's slightly negative when we look at it through the eyes of the spot market. You get this doji. Now, dojis can really be significant in that they are quite frequently seen at market bottoms and tops. It's simply a consolidation in the market. And really what that says is, in terms of straight candlestick analysis, is let's consider this one large candle. When we look at this large move, it really shows a dominance in terms of the bullish faction as it weighs over those that are bearish in the market. In other words, the market opens and closes near the highs, and all throughout the day, even though at one point these lows would have made this candle red, we had a significant spike to the upside. And when we look at it in that way, the bulls absolutely dominated the market. Opposite is true for red candle. However, in as much as a red candle, a long red candle, I should say, shows you dominance of the bears over the bulls, and a long green candle shows you dominance of the bulls over the bears, a doji shows you that neither the bears nor the bulls had absolute domination in the market. Considering that this market had a pretty sizable range within it, considering the high of over 90, the lows just above 70, call it, what did we say, 73? That you had a sizable move in which at some point the bears were dominant when the market was down near these lows. The bulls were dominant when the market was up near these highs. However, where it closed showed you that neither the bulls nor the bears were able to have any kind of dominance in the market. So we are keeping our stop where it is. The stop is sitting below 70, so we've got our stop below this moving average anyways, this 200-day moving average, and it is below this because of these tops here, along with some other tops. If we were to compress this chart, we'll keep that stop right where it is. We'll maintain our current long position. We'll see what the market brings in the next couple of days. Now, the rest of the precious metals complex did have some movement to the upside. Platinum and palladium specifically. Our primary trade, as we have talked about, is absolutely in gold. Palladium is our secondary trade, and a couple of reasons for calling it a secondary trade, but one of the things is no matter how many contracts you have, if you've got 5 contracts of palladium and 5 of gold, each contract of palladium is half the size of gold, so you're going to get half of that move. When we look at palladium, palladium did close up about $3 on the day. The low, $695.40. The high, $708. The close, $703.65. Just a little bit below where we entered this particular trade at. Now, the key to me on palladium is looking at the channel lines, because we have traded within this upward bias channel line. And as long as we are trading within this, we can kind of expect it to move from top to bottom, top to bottom, and now I would expect it to be climbing back to the top of the channel. And so that's what we'll look for in palladium. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.